So you're planning to fund your education using student loans. In today's video, I'll share with you how these loan providers determine whose application to accept and whose application will be denied. So I get a lot of emails and comments from you saying you applied for a student loan and your application was denied. And that makes me so sad, typically because for you to have applied for student loans, for many people, it means they've explored so many other options and they finally decided to apply for a student loan and it didn't work out. And that's why I'm doing today's video. Today, I'll share with you the most important factors that many of these loan providers consider when they are reviewing your application, and that's what determines whether or not they accept, they approve, and or they decline your application. So let's get into it. Okay, so let's jump into the factors that these loan providers use. So first thing I want to say is that a lot of these loan providers, and I've confirmed this from some of them, they have algorithms, and so they don't really, there's no human being reviewing your application at first. So it's an algorithm that they've created that considers all these factors that I'm going to mention. So the algorithm basically goes through your application and assigns you a score based on the metrics that are based on some metrics that they have created and fed into their algorithm. So I'm telling you this to say, sometimes because these are algorithms, there will be some error. So that's just something we have to live with. So you can do everything right, but someone has plugged in a couple of metrics and factors into an algorithm, and because of that, there would sometimes be some error. So I just wanted to mention that the first review on your application is done by an algorithm, not by a person. Usually if there's some dispute or they feel that algorithm kind of reviewed your application wrongly, then they send it to someone on their team to review. So that's the first thing you need to note. So a couple of factors that they plug into these algorithms that determine whether or not you get the loan. I promise I will get to the factors, but I just also wanted to mention one more thing that is important here. These loan providers are trying to do one thing. They are trying to minimize their risk. So the less risky the algorithm or their systems tell them that you are, the more likely they're going to deny that application, right? But if you're someone that, based on these factors that I'm going to get into right now, if you're someone that they believe isn't super risky, then your application is going to be approved. So these factors I'm going to mention now essentially helps the loan providers determine whether or not you're a risky candidate or applicant or not, and what level of risk. So their algorithm assigns scores. So the algorithm will go through your application and try to see what score do we assign to this person based on these metrics, based on these factors that I'm going to mention now. And if your score is lower than a specific threshold, then your loan will be automatically denied. Factors have different weights allocated to them, but I wouldn't be talking about that today. So one of the factors that they will consider is the university you're applying to. Okay, so some schools, because these loan providers use a lot of data from previous data from so many years of people studying abroad and taking student loans, they can tell, or they have a sense for like graduates of what schools easily get jobs and pay back loans easily. So if you're applying to certain schools, it's not you, it's just the school, because even though they fund that school, you will get a lower score. Remember, the algorithm is assigning scores to you. You will get a lower score just because of the school you are applying to. So one of the things you can do if your application has been denied before is to just change the school you are applying to, and that could be the solution to your own problem. Another thing some of them consider is course duration or program duration. So if you're going for a 2-year program versus like a 5-year program, there are differences, right? So if you're doing a 5-year program, it just means you really can't start paying back until after you graduate, which is in 5 years time or 5.5 years time. But if you're going for a 2-year program, there's a higher chance you'll likely be able to get a job right after the 2 years and you start paying back your loan. So they consider this as well when they're determining whether or not to just approve or they're going to decline. Another thing that they consider is the college or university you graduated from. Let's not pretend here that these people are not considering this. They do. If you went to some schools that are considered to be prestigious, you just will get a higher score for some of these metrics. So if you graduated from Harvard or Yale or some of these schools, they consider these things too. Now, remember what I said at the beginning, this may not carry as much weight, but many of these loan providers consider that. Again, they are looking at a lot of data. Who from, like, what schools have you typically had their graduates getting jobs easily and paying back loans easily. Sometimes it's not Harvard or Yale, it may be even a small school you've not thought about, but they just always help their students to get jobs and pay back their loans easily. So they consider some of those things in determining whether or not to grant you the loans. Talked about schools and everything. They consider whether that's the college or university you graduated from or the one you're going to. Now let's talk about things about you that they consider. One of the things that they consider is your credit score, credit report, whatever you want to call it. If you have a lower credit score, of course you have a lower score and your application will likely be, declined. And that is because, like I said at the beginning, they are just trying to minimize their risk. Of course, someone that has very good credit habits and pays back their loans, there's no history of them owing and not paying back, that person will likely get their loans approved. If you submit, as part of this process, you submit a credit score from your home country. If you submit something and there are some red flags, your application will likely be denied. Another thing about you that they consider is your work experience, the years. I don't think they, yes, the years and also the industry sometimes, I do believe they consider those. So the years of experience, if you just graduated from undergrad and you're applying for loans for grad school, you're less likely to get it versus someone that has 5 years of experience post-undergrad. And the reason is, again, the loan provider, they are trying to minimize their risk. Okay, so they believe if you have a lot of years of experience, you will find it easier to get jobs and you will likely pay them back easily versus someone that has no experience and is going straight from undergrad to grad school. One big thing that they consider is your salary, and I want to spend a bit of time on this one. So sometimes you hear this thing that the past is the best predictor of the future. Sometimes I don't agree with that, but for loans, let's just say that's what they do. If you're someone that has worked in big organizations before and you've earned really well and you put all of that information when you were in your loan application, you will likely get your loans approved. And that's the simple situation. And that is because they believe if you've been able to earn this much before going into grad school or something, then what's going to stop you from earning at least that much when you graduate? And that's why if you have a very low salary, it impacts you. That one, I will assume you already knew, right? It's something that happens for most loan providers. And remember, you don't have a cosigner. So all they have is your past, like figures from your past, things from your past to determine whether you deserve their loans or not. So this is the one that impacts a lot of international students because, again, I'm Nigerian. You already know that. And so for some of us from countries like Nigeria, where we have really been impacted by some exchange rate depreciation and all of that, because you are applying for these loans in dollars and pounds, by the time you convert what you're earning, which is likely in Naira, you convert it to the dollar equivalent and you put it in that application. Again, remember, it's an algorithm they've designed. By the time you put it in that application, they'll rather pick someone that's from another country. They'll rather offer the loans to someone else who's from another country who has always earned in dollars, and so the difference isn't that much. Essentially, what I'm saying is, for a lot of international students that have worked in countries that have really not very strong currency compared to the dollar or to pounds, this is usually where we have a lot of problem. This is usually one big reason why your application is denied, and I don't really know what you can do about this one, but I'll just say it's a thing. I can't say go and get a higher paying job before you apply, but just know if you already earn very well, you are more likely to get to have your loans approved. Okay, last one I want to share in today's video is the loan amount. Where possible, my friend, try to apply for a lower loan amount versus like a bigger amount, and this is because, of course, the risk is lower if you're applying for like £10,000 or £15,000 versus like applying for $100,000 like I did. So that's just one more thing you need to pay attention to. So if you're reapplying, you may want to change the loan amount you're applying for a little bit. That's it for today's video. If you enjoyed it, if you found it useful, or you have questions about loans, just ask me in the comments and I'll try to answer those questions. If you found this useful, give it a thumbs up, and I will see you in the next one.